Hey everybody, welcome to September 18th Principal Profit Trader Coaching Call. We're going to get right into it. What I mentioned yesterday, right, in the trade plan, when, it was around, I forget what time it was, around 8, right before 9, right around 9:30 when you want to get active, allegedly, right, because there was this double bottom, right? You might have came in with a sideways to up trade plan because we had a bullish engulfing pattern. If that's all you would look at for that day, right? If all you could look at for that day is like you're saying, well, it closed up here, but we're closing at the top of this balance, right? So we don't really have a strong edge either way, right? And I said, if I'm not saying you have to step in and short against all this bias, which has been bullish, but I said, if it comes back down to yesterday's low, it's an automatic long. Don't even question it. And I had that drawn on the lower time frame. Also, if it comes back and touches 50 moving average, came back really close, perfectly into the zone. You didn't even have to get it into the zone. If you had a resting order, you could have watched it go up here and then just go to market. It's like a little buying tail. Obviously, the next 15-minute candle, if you're patient enough to get halfway between, usually that's where it'll go halfway between the buying tail. If because the context was already planning that we were going to go long at yesterday's low, because at this point in time, yesterday's low would be one leg up, two leg up, igniting, right? We knew that this was a inverse head and shoulders bigger picture pattern. So technically, right, once price went down here, we were in a bearish downtrend. This was at a place where the larger time frame bias, which has been bearish, was at least going to become neutral, uncertain as to who's going to be in control, because we could at least assume that we don't know from a larger time frame perspective who's in control, because this has gone down essentially a couple legs now into bigger picture support. We talked about how this is a balanced breakdown pattern and it already moved kind of 100% the range, and this is a much larger balance, and we always look at patterns as fractals of each other, and we want to see which fractal is bigger and then go with that pattern. So we were neutral at that point, but once we start to see it turning, right, you're like, it's getting a confirmation. Your larger time frame bias now becomes bullish. You're only really going long, even though we knew this would probably form a shoulder, right? Because first test of a resistance zone is also a concept. You're going to get a reaction. But it didn't invalidate the bigger picture pattern, as I was calling this ahead of time as it's forming. And then once this matures a little bit, there's greater odds for a breakout, right? Then we can break through it, and that's what happened a few days ago, right? And then we had the move up. Now the market moves in a series of thrusts and now corrections. It started to consolidate, right? The larger time frame bias is bullish, even though the short-term bias is neutral, because the intermediate term is up and the big picture's up. That's in alignment, right? So I'm basically looking to go long at every good support zone, right? And I mentioned look how good sideways up calls work, and it's been a nice, easy week in that sense. Now, what an amateur trader would do is then see this balance breakout and then buy it as it's breaking this balance, right? Because all they can focus on is just this pattern, right? This balance breakout pattern. Let's get all the patterns back, right? But if we just look at bigger picture patterns, we're not looking at it from a holistic point of view, right? This went right into first test of a major high volume resistance zone, right? It doesn't necessarily invalidate any of the things I've just been talking about, but it does make entering at that time super risky and stupid. So we don't do that. We're just holding a runner now, right? I'm not even saying you even had to just be the hero and jump in and even get a reaction short against all that. Obviously, first test did provide a reaction. I even mentioned, if you were, like, hey, if I was going to short, it would be right here. And, I did get this, but is this really what I'm after? 117,994 to, like, I'm not really into this for 500 points. I'm not into this for a thrill, right? Now, yes, look how nice this zone worked. Every single time, right, that zone worked. I said if it came back down here again, really awesome double bottom. And then when things are working, you're not spending a lot of time to get financed. I think I sat through this signal at one point in the channel. This took forever, right? This took forever to go through, because like this was this inverse island pattern. It was less mature. On this day, we had certain things happening, right? Now this was more mature. That's one precursor for a trend. And we had market moving news, right? And we had market moving news at 2 o'clock, right? And right around that time, we know around an hour after, an hour before, or 30 minutes before after, it can get really bullish. And, it's not like, oh my God, we came down here. Now we were in a downtrend. It increases the probability for a trend. Now we have to go down. No, not really at all, right? Really, what those pre-market factors that increase the probabilities of a trend are doing is that are increasing volatility, right? And that's a huge component of a trend. You can even see on this market moving news day, once the news was announced at 2 o'clock, and right around before it, like the candles start to get really large. Okay. And there wasn't this island reversal pattern. It was more mature. There was market moving news. We had an extra day of confluence now. Look how nice this held. So like this zone was a zone that you shouldn't even be thinking about whether it's going to hold or not. You should be thinking about this is the bottom of a week-long 1, 2, 3, 4, 5, 6-day balance, right? Where we know when this can ignite the larger time frame bias, which is this balance breakout pattern, right? But we weren't going to take this low extreme of day because it didn't have that. And it was at resistance. Yes, it had this low that went here. You could even argue it was on top of this volume node, but that's not that great. But more importantly, the resistance zone here is much stronger than this little support zone that brought us up to here. This resistance zone brought us all the way down here. That's a huge launching point of directional conviction. I would be more happy if you shorted this zone. Look how well my zones work. I don't adjust these after the price. If you have the conviction, I mean, you could just like fade my key reference zones on every single non-trending call, and you have a good chance to make money, long or short. I'm not saying you have to do that on every single one, but even on this one, if you went long here, and even if you like got all out and shorted, you still got this. I'm not even saying that was correct process. Well, you shouldn't have shorted that because reversal. But the idea is that even at the back of the zone when the momentum's against you the next day, I mean, look at that. That was at night at 2 in the morning where I was like, oh, I would rather short that. But I was so tired because it's at the back of this extreme zone. It has a good edge. You don't have to risk much to find out. You see how the risk is essentially, I mean, you could have it halfway between these two zones. You could, if you had a little bit of a wider stop, it's up into the next zone, and it's still not even greater than 1%. That's like 500 points. If you do like 500 over 117, 420, I mean, 1% is 1,100, over 1,000 points, 170.49. We're way under 1%, and we're even into the next zone. If you can get your stop into the next zone, you have great trade location. Trade location is such a great source of edge. It's just unprecedented, right? And, up to here, you could go on what the average true range is, and this is like around 3,000, and we haven't really been getting ranges bigger than that around now. I mean, look at the average true range. It's under 3,000, right? So why push it? You have to ask yourself, what am I risking what is I can get out of it? Here, right? Even though it was scary, it looked down and all this, like I'm already prepared to do the counter. No one wants to buy here. It looks scary if all you see is this and everything's red, but I'm prepared ahead of time. If it does this, then I do this. This one I skip. Maybe the old me would have took that, got stopped out, and then wouldn't have the guts to take that one. But you know what? You skip that and you take the good one because you have patience. And you can see just how nicely that worked out. And we did get this bounce breakout pattern, but remember, everything's contextual. There is a bounce breakout pattern, but it's only a week long. On first test of a high volume node that is not just a week long, but it started on July 11th. Okay, it's like multi-month. Okay, if we weren't in this trend here, right, this would potentially could form a huge break, a huge problem. It's certainly not something that I want to mess around with. Now, as this thing is forming, this isn't reliable support resistance in this time frame as it's forming, because it's forming. It's a running profile, right? It's only when you came up here, touched it, moved hugely away from it, and now going all the way extended, one leg, two leg, and now three legs into it, we could get sideways up there. So while an amateur trader might buy this as a balanced breakout, this is not a contextually aligned balanced breakout setup because you're right into resistance zone. You wanted to buy Like I said, the blue moving average, when we went to the bottom of the support zone on this sideways range, because at this point it ignited the larger time frame bias because the intermediate term was up and the big picture was up and the short term was just neutral. That's a great time frame alignment scenario. Now you might argue that all three time frame alignments are up too. Yes, but really, at this point in time, the larger time frame bias was ignited. At this point in time, I'm calling this an intermediate term bias, but now the bigger picture bias technically is this pattern and it's bearish, right? Because this is August 14th, which is more than a month ago. So I define the big picture bias as anywhere from 1 to 3 months. There's that variance, so it can allow for me to understand which larger time frame player is in control for the day that I'm trading. I know I could zoom out and well, the bigger picture is always up, blah, blah, blah. Yeah. And it doesn't matter right now. You know, and there's infinite time frames. You know, the intermediate is the last couple of weeks, the week or two. That's been clearly up. And now the short term is not just neutral, it's up. So you have short intermediate term alignment, which is usually time frame alignment, until when you get to a bigger picture bias zone that can potentially give us problems, like currently, in my opinion, where we are currently at. If, however, the unexpected happens and we break this, then I have a runner in. And when you break a key reference zone without a big problem, that's the lower odds thing, then that also gives you information that it's even more bullish than we thought. But like I said, because this was such a sideways action that broke down and then it caused resistance and then resistance and we had a huge move, the fact that this is the first time we've tested it and we've moved 3 legs now up into it, that's nothing to scoff at. We could get, like I said, when we first went up here and we came all the way back down here, this was almost like a false breakdown pattern, right? We closed here, we had a buying tail, but it wasn't like super 100% certain what was going to happen because it's not like we closed up in the green slightly above here. It was like below the breakout, but we had this buying tail. So that's kind of the context that we're dealing with for Bitcoin. I mean, it's healthy, but in terms of like an income producing trade, we have to be careful. Like I'm not going to, when did the trading day start for us? It started right technically at 9:30, so that was here. I mean, really a mediocre day. If you didn't trade the overnight session and you didn't, you just happened to be asleep or Europe. I mean, this is like 2:45 or whatever. If you weren't around or it didn't get filled, so what? Don't do the thing where you missed this move and you saw my note and you actually saw the same thing. It's not rocket science to buy down here versus here. And don't do the thing where you walk in and you're like, oh, shit, now I have to do something because I missed a move. Now I have to buy some mediocre sideways thing up here because it moved up here, or even short now and try to blah, blah, blah. No, just sit tight. Let's just go for the Class A setups. The Class A setups were at the bottom of that zone. And because the larger time frame price was more bullish than bearish, I wasn't even interested in shorting the zone up here, which actually did work. I anticipated that eventually we'd break it, and we did. So, like I said, I'm reducing my trade frequency because I want the better setups, and I'm also getting a lot better at letting targets run. Like was it something in the morning? I think the target was around 17.5 or something, and that's where we're at today. So I reduced risk at the correct zone, but I don't have a strong urge because I have a runner in to do anything. I don't have a strong desire to fade it short counter trend, and I feel a gut feeling now to reload it at some really mediocre support zone when things can overshoot and go the other way. I just really don't know what's going to happen because, like I said, there's this ambiguity now because we had this bounce breakout pattern, great, and now we're testing this on first test, and it's huge. I mean, if you just look at just visually, right? This is the high volume node. This is the high volume node. These are all high volume nodes. The really skinny ones are low volume nodes. I mean, which one stands out the most? This one clearly, right? It's something that stands out quite a bit for even the more data that we can take in. You can see that it's a very important high volume node. It's not it's on the daily. It's not something I can even see on this time frame. So if you were an amateur trader and all you had was this open and all you were focused on was this week-long high-volume node, you might have been buying here and really doing crazy things, not noticing that when we came back down from that on first test, the back of the zone, we were literally coming from a high-volume node or close enough to it where I actually didn't have the high-volume node drawn yet. I had this key swing high, which is close enough. It's influenced by that. I could draw a zone between the two. So I had a two green zone here that her pip hit perfectly until we broke it slightly. Now I'm just going to use the indicator, just visually it looks better. But you can see how even then we got that reaction, right? So there are sellers up here. We have to be careful that this doesn't, turn into a false breakdown and then it comes back down. We have a larger sideways thing, and then we have a bigger balance up here that needs to touch this yellow moving average before it comes up here, which actually would be more bullish than if we just keep trickling up here. You see how when we came up here, we got overextended and went down. When you build balances like this and break out from it, it's a good sign. For example, the reason why I wasn't interested in shorting this, it's not like we went green, green, and then another green candle, and then like had a doji day we're about to reverse, right? That would be pretty straight line steep up. Instead, we went up, sideways, the distribution up, and now we're resting, and that gives us a lot of potential energy, and then we break out with strong kinetic energy that increases the probability for a trend because it's a balanced breakout pattern. Usually I'm on board that, like, yeah, and I have a runner in, but because of that strength, I'm not adding on anything because the ambiguity is that despite how strong that is, this high volume node is also very, very strong on first test concept, where like people that were holding there might sell because it's an area where a lot of buyers and sellers transacted over a long period of time and they have a lot of stake in what goes on. And there's people that want to sell it break even. And there's also traders that were loaded around 107, 841 and are happy and are going to be selling into that because they see the same high volume node I do. But that being said, the way that we got there is bullish, meaning we had the week long bounce prior, and now we're breaking out into it. That's great, as opposed to if we just went relatively straight line up into it. That being said, the strength of it, I'm not, discounting. I'm just saying we have a better chance of breaking it with this balance. So, we got a runner in. Overall, the markets are closing pretty healthily here on strength. Nothing insane. Let's just take a look here. Right. I mean, I saw this yesterday for Ethereum. It's tempting to even reload the portfolio, but technically, I'm still reloading, under this major resistance zone. That defeats the purpose of the quadex, right? Even though it's tempting. Same thing with SWE. With this beauty principle signal, like I said, I took half off up here or something like that. And with the beauty principle signal here, how it behaved, this could have been a reload portfolio signal. I almost did give that, but then like part of me felt like, well, I need those profits. It's half off. You know what I'm saying? It's still something that you have to follow the principles of what to do. But if you did reload there, that would have been fine because this was a huge move. This was also another area I was considering reloading, but it is what it is. I have a lot of other capital exposed. It's not bad to have some of the portfolio off in Tether, in SWE, and Ethereum. Dot finally showing a little bit of strength here, climbing above that $4 number. Be nice if Dot could get those parachain runs this time. We'll see. But I think it's going to be this because of the level of scams and the amount of abuse that retail and crypto investors have experienced. I would not be surprised if this alt season looks a lot different. Whereas I feel like last alt season was the .com of the late 90s that we all missed out on, where pretty much any company with a website got funded. That's kind of what I felt like the last couple bull runs were. But with the amount of memes and scams, and maybe I'm feeling some of that myself, I feel like it's going to be selected, well-backed projects that outperform the market, but it's selected runs that are smaller than we think. That it's not going to be some giant, massive thing. So we have to kind of, like I said, we have the tools now because we have way more sophisticated players. We're not the only people that have tried really hard to improve the last 4 or 5 years. Okay. And on top of it, now there's more Wall Street guys that are really smart and have, sophisticated equipment and full-on teams looking at the same charts. Like everyone wants to sell and dump on everybody. It's a player versus player game. So let's not get greedy and stupid. Right. I mean, this was an area where we took profits on Sol. And even though it could keep going up, this is another area where we'll take profits and we'll be fine. And if it bounces up here and builds structure, we'll reload above the breakout spot if need be. Like, you know, that's the thing. Everyone's so FOMOing in on will this go higher? Will this go higher? They forget that when it's high at areas where last time when it was high, everything moved down is an area where you have to capture profits or someone else might, and then you'll lose everything. So the whole idea of will this work out or will this hold when you're at major resistance is not even something that you should be asking yourself because it's the wrong question. You know, the right question is what I'm doing right now in my best interest in the long run? Is it serving me? If it's not, then you have to discard it. You're gambling. And everybody's gambled big time. I'm in a channel where someone just admitted that they got into whatever coin really early. It's sort of like in that LTO victims group, and he lost 1.4 million or 1.4.4 because they couldn't open the laptop password, something. I mean, it just this thing with the digital thing can make people crazy. I mean, how about the guy that sold all his Bitcoin for pizza back in the day? He would have been a billionaire. How is he living? I mean, you have to really kind of transcend what we're doing here about what experiences we're getting out of looking at screens and what we plan on doing and really how we relate to it, because that's really the only thing that we can control. Now, what I'm saying is this is like a rounded, this is like a cup, right? And we have a handle here. That's another way to look at it, right? And this was the inverse head and shoulders, and now the pattern morph, which is still bullish for everybody, is the cup and then the handle. Right now we get the breakout. Right, odds are this pattern will eventually break this high volume node, but who wants to be the first guy to test that out? I don't, and you shouldn't either. And that's that. And that's why we have this visible range volume market profile, because it shows who's in control out throughout time. It shows places where buyers and sellers spend a lot of time transacting. It's a hidden area of support and resistance that people forget about it. And you could also use it on the smaller time frames because it comes up quite a bit as well. That's when I just drop and drag it. Anytime you see a couple of days worth of sideways action, you can drop and drag it, right? And this was obviously a really nice trading range where anytime it got to the bottom of the range extreme, remember range extremes are one of those key reference areas that I use to draw, support and resistance, right? You're in a trading range here, right? And anytime it got here, right, we went up. And, here's the 15-minute double bottom with the right context. Nice, right? First test, smash up, even nicer because it went all the way down. And then you kind of had this strong reversal. Now, if it gets back down here again, great. Let's buy again. We'll do it again. What we didn't want to do is be the guy that was buying up here near this resistance zone, because even though it might work out, it's against the rules. Because over the long run, buying near a major resistance zone is going to make you lose money. It's a losing strategy, right? This is an area where we're taking profits. That's what I did yesterday. It'd be stupid for me to reload at an area where I took profits already. It's like, that doesn't that defeat the purpose of the quad exit? But yeah, of course I woke up and wanted to do something. I even wanted to do that little short. That's why I just said, hey, even though this is a blah, 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 because of this, let's skip it. That's what we have to do. That's what the whole daily call is. It's like our trade plan for the day, what we're going to not do, what we're going to skip, how we're going to approach the setup. But a lot of the times, people can't do the daily call all the time right before the new candle opens. One, I'm not in a performance state. I'm literally asleep at that time. Usually I go to bed very early because I wake up at grandpa hours, bingo hours, which is pretty nuts if I think about it. I'm up pretty early. So, yeah, I mean, a lot of markets are looking like I think we're going to have a pretty strong few weeks here, maybe even prior to October, just based on the structure of. I mean, you can see theta this isn't a weekly by any means, but it's very similar to what I saw in SWE the other day on the weekly, where basically we're in a volatile mature balance that's contracting, and we could be primed for a triangle breakout to the upside. right? This is actually, even though, right, we came here, right, we didn't even really get much of this sideways action here. This thing has reversed a lot quicker than we think, giving a lot of uh, confirmation with this zero line reject here that, if you had the guts to buy it right on that week, you are sitting very nicely. Not an easy trade by any means. We just had a balance breakdown. Maybe this could have went a little bit more sideways, but the unexpected also gives us information now. Like, so I basically was anticipating a mediocre September, meaning, just sideways, kind of like up here, but then we would fail, maybe go back and forth. And then maybe around here, there'd be another, like, sort of like this, right? We get like a baseline double bottom, which would have been really nice here. And by that time, I imagined that the 50 MA would be right underneath it. And that would even give us more confluence. And then it would start the initiation of the trend, which would take us into, this bullish fourth quarter. In December, that's what, November, December, maybe even January into March, right? So, and then May was going to be, okay, if things start looking topping, that's an exiting and maybe starting to short now, position trade the portfolio short. So, but we're getting something different now, right? We're getting more strength now. We're getting almost like a V here, a V reversal. And this zero line reject is highly being honored. So what happens now if we get up near the trend line resistance and it's around this time cycle? Now, the time cycle doesn't say necessarily what it's going to do. It just says that around that time, something big is going to happen. Meaning, if you were just within the last 30 weeks of the time cycle, just going back and forth sideways, and you happen to be now near the, range lows, right around that inflection point of the time cycle with a double bottom or something, that's like really good odds that it's going to hold. But if you're near this trend line resistance, right, if it starts to like be a false breakout, then this would be, technically a failure, right? And then we'd have to get something like this where, like, okay, this was a bigger resistance zone. That was a place to take profits. I'm not saying then the next reload point would be in March of the next year. That would be way too much. It would just be now, uh, just this would be more of a distribution area, right? But if we get up here and it's looking, this is what I think is going to happen. I think when we get up here, it's going to be a breakout. I just think it's going to be a breakout based on the fact that this was unexpected. This to me, this recovery was faster than unexpected, which means it's giving me more information. That whereas here, this needed time and maturity, beauty principle to form the shoulder here, and then we had this super pronounced zero line reject that was almost a hook from extremes. This time, because that structure is already there, we didn't even need that, so it didn't need to be as pronounced. We even had the yellow CCI overshooting a bit, which is a little bit of a classic. This one was so extreme. So I just think it's stronger than expected, which means that up here, it will probably be a trend line bounce breakout pattern instead of a false breakout pattern. But at this point in time, the prediction is it's either going to be a breakout pattern or a false breakout pattern. With given this pattern, which is a V recovery, it now has higher odds to be a breakout pattern, right? I wasn't even planning on that even being up there at that time. I was planning on this being weak and mediocre, and then going into October, this would almost be like an entry point near some kind of low that may not even have been this pronounced. It could have been even more shallower than this, but the idea was that it would range for a bit. So I'm kind of pleasantly surprised, but not so much where I'm not going to be clear-headed, right? We have to be very objective in what we're seeing. And what we're like, this is what I imagine today. If I did short this, the risk reward here, if I would have to have some really tight stop. But really, if this was truly a zone and the context was for reversal, I would want this to be, almost a higher up here zone, which is still within, less than 1%. But it'd be worth it to me because then I would want to get it at least down here. But this is almost something like I imagine even bouncing back and forth and not even having any clear, no directionality and no real edge. But there is an edge right now for a runner. So that's what we're holding. But yeah, right now, besides the Bitcoin context, how's that Avant trade going?
Sweet.
See if I can unmute you here, Tim. See, I have to go to host tools, allow participants to unmute themselves. There you go. I think that should work. Maybe it'll work now. There you go.
Yeah, there we go. Yeah, those trades have been really sweet, and it's even though it seemed like it kind of plunged after it hit that high,
Mhm.
it's steadily climbing back up. I mean, it's
Yeah,
been researching more into it, and just the base layer that it's working off of, pretty damn impressive. So I think it's going to keep climbing. So I've still got a few trades that we're done back at like 63 cents, running on
nice.
it.
Yeah, and like how can we huddle is like, just the quad exit. If you've already some folks have already taken half and they're really happy. They put half of that money in the bank account and now it's just let's see what happens. And if it's hard to put in a stop, if it's on some kind of a decentralized exchange, just be really alert for a mental stop. If it's even anywhere near it. But with the uh, the way that I was, obviously describing the Bitcoin trades and the income producing day and swing trades, that is, at least from the risk management point of view, is a different strategy than when I give that's more like a portfolio or position trade for a buy and hold. But it was great that because it moves so much, who cares? That we can be whether it takes a year to go 100% or if it happens in a day, I'm still taking profits. And just what's great about that is that when we can control the position size with, we can control the risk with those types of portfolio reloads or whatever with the position size it's because they're so volatile, they're so small market cap. It's almost like they might move 1 to 2% within the first 5 minutes of you going in, and you're like, what? So like, don't, that's why we that smaller on those. But same thing with the that tensor signal I gave. I didn't put a lot of money on that. I think it was like a 5 grand position size, but it. What did we get on that? That was huge. We got like a 6x. I mean, that was like a big trade. That was, I was willing to lose the 5 grand, which is fine. Now, if I put, 50 to 100 or, a full on day trade, and that's stupid. I'm just not going to do that. And that's just how we have to approach those smaller caps. It's almost impossible to do a fixed percent, 2%, 1.5% risk model on. But with position sizing, we're still going to be fine with it. So yeah, that's good that you're going to. I would keep on holding on to the runners on that. That's what I'm doing. As for Sui, I'm still half off, even though it was tempting to reload the other part here. This would have been a huge move. But we have to have an abundance mindset. This thing is, it's got a big journey to wherever it's going to get. And this is also in a volatility contraction, which I was talking about yesterday on the weekly. And you can just see it as well on the daily. So looking strong, and it has. Let's see if I can um, bring it up here. This is, I mean, that Anderson Horowitz on September 7th of 2021, he put a $36 million Series A into SWE. And then on September 8th, 2022, he put a 300 million investment into SWE. And you can just see that, I mean, he's a major SWE investor. And who is he? Well, he's just that Horowitz is one of the biggest venture capitalist companies in the world. And, we just want to go where the money uh, is going. Politics be damned at this point. So SWE is one of the darlings. You can see it's up quite a bit today. It actually has relative strength, really, with Ethereum only up 0.33%. Bitcoin's up over 1%, and SWE is up 4.75% at a price of 3.952, getting very close to that $4 number. which, 4 and up to about 443 has been quite a sell wall, guys. So just, be aware of that. And that's why I'm still, and that's exactly why I took half off the portfolio. Technically, I'm supposed to stay half off and then take another half off when it gets up to 514 to about five, up around five something something. So that's just, that's your first target, that's your second, and your third, and then it'll go sideways, you reload, and you don't get greedy. What could happen is that, I wanted to reload here and here. I saw both of those, almost gave them this signal, but kind of held off via that larger time frame thing that I said, partly due to knowing that if I did give those signals, that's more of, I would have to be very active with my stops because I didn't DCA at a lower price. So I was like kind of just, and I really couldn't generate a performance state on those. But you could just see, how nice the beauty principle works. Like I said, it's a lot easier to just say what to do than to actually risk your own money on it every single time. But instead of jonesing, I'm not going to buy here. Let that thing go. That's just not what we do. And that's why we have a lot of that NLP and that journaling is super important. Why you're doing this and why you're doing that, uncovering those unconscious blocks, and by writing especially down for the last category, the process for improvement. That's important. Like, it's not just like what you did well, what you learned, what you could improve, which is calling yourself out on your mistakes, which a lot of people, traders, don't want to do. It's the last column, which is basically your process for improvement. That is super important. Like, how am I going to improve on this? Well, I'm going to take, better care so I can have more energy to scan because there was a good opportunity cycle that was easier to describe than to execute on, for example, or, I'm going to really let my winners run because as soon as I take that quad exit at my first target, I'm really going to step away. Well, how do you step away? I'm going to just jump up from my seat. I'm going to say, set it and forget it, and just basically follow correct process, irrespective of if I hit my next target or not, which is really setting it and forgetting it. So yeah, closing strongly today across the board. Obviously, we want to see exactly how we close around 8 o'clock, 10 minutes prior, and that's when you would do the basic template for snapshot. And then if you don't want to trade the overnight session, at least for us Americans, around 8 o'clock at night to midnight, overnight, then what you would do is you just wouldn't scan. You wouldn't be looking for the real-time confirmations or any kind of thing. You would just do a quick template, and you wouldn't even have to do like the largest one that I've added, where I add the multiple time frame analysis and so on to it. But yeah, other than some folks have been asking me like what I've really been buying lately, and besides just the very conservative trades where everything has a stop loss, the only thing I've really purchased that which would be a bag was the Avant one, and that's also been quoted because it moved way faster than we all thought it was. But why not? Small cap, it's a good pick. Had room. There's a lot of things in bases generating a lot of excitement. So that's seemed like a win-win just to bet something reasonable on it. And like I said, we have to take this one day at a time. We are not 100% out of the water. Look at Ethereum, right? We all think things are going to break. That would be great, but we still have major resistance here. And why couldn't we get same thing that happened here, right? Came back up, although less odds because we had all this balancing now, and it came back on top of that, which was a great trade. I almost gave that as a signal as well. I really wanted to take a lot of trades, but it was hard psychologically to do this the last week. And you can see this nice moving average here, right? Whereas last time it came up here and then failed, right? And it still could do that. It could come up here, fail, and then come back down here and test this blue moving average with a stronger node, which would be, for me, an automatic long, right? But I don't think it will. I think we're going to go sideways to up tomorrow in all markets, despite the resistance for Bitcoin. Maybe Bitcoin won't be as strong compared to the other ones tomorrow because it seems to be at stronger resistance in Ethereum. Like, for example, Ethereum still has some room to go. Not a huge amount, but, about 200 points or so. Whereas Bitcoin already, in my opinion, like that to me is not like the target. The target is can we break the high volume node, which Ethereum doesn't have that. Ethereum is actually above its high volume node. So even though they kind of move in similar fashion, each market has its own unique context. And understanding the market context is key. So yeah, that's pretty much it. I'll open it up if to the floor if you have any questions, Tim. But that's pretty much the market analysis for the week.
Well, if you have time, could you maybe check out Near and maybe do some
Check out
analysis on
here.
that?
Yep.
Yeah,
And
'cause
you also mentioned something in the channel as well when you were talking about, how do you, at what point in time do you like, oh, this has got to be a trend thing? Well, you never really know for certain that, unless it's like those crazy, crazy days where everything's crazy green, almost like double digit. But like I said, if you have, your daily call in front of you and you add to the daily call all those templates that I have, especially for the pre-market conditions for a trend, which I've listed. I'll list them again in the channel. Do we have volatility contraction, elevated volatility environment? Are we in a mature balance? Are we oscillating around a high volume node? Do we have a narrow range day? Do we have market moving news? We had all those things yesterday, right? That market, the Fed, especially when I say market moving news, I'm really talking about the FOMC. So once you're alerted and prepped for that, then you're on the lookout for, I want to get on board some directionality, and then we could start moving here. Then, to get the confirmation of all that, then you're looking for, what the strong price move and intraday to sustain momentum. But regarding the SWE, if it was a pure trend day, just intraday, right, making higher highs, pure trend up, higher lows. On strong pace and momentum with good volume, vertical volume on above average relative volume. But, is the context right? Maybe, with SWE breaking like a couple week of a balanced breakout, right? Then it would have higher odds to keep going because the pattern too. Did it break multiple time frames, right? And then once, like if we have time frame alignment, there's just greater odds for a trend, in general. So what the amateur does is that they only look for the lower time frame, they'll look at what's happened in the overnight and today, and say, well, it looks pretty strong. Maybe we're gonna have a trend there. That's not how you do it, right? We're doing it advanced before we spot the price action, and only then when we see the price action does it confirm our idea or not. And we're pretty close to it. Those pre-market conditions for a trend, about 12 of them are, they're pretty spot on.
It's
Oh, it
Near,
was near, not near. Okay, yep.
NEAR.
I was gonna say, thank God. It's an ugly chart, mirror. Okay, here we got a chart. $13. 418. Um, I like this chart. It's a good chart. I mean, you've been in this you were in a down phase for a while. Now you're in a sideways phase, and now you're going to, it looks like a balanced breakout phase that's about to happen. So you could go into an up phase now. So I don't know if you have a position, if you're wondering whether I should sell now, like did you just want me to take a look at what I thought about it, or did you have an entry price you wanted to talk about?
Yeah, I had some entries around like 250, 260, but
Wow.
basically only because it seemed super cheap compared to, past performance.
I mean, that's a great entry price because you're right here. I mean, technically you could reduce all your risk right now on strength if you wanted to, right? You're at the top of this, or, just, watch for a breakout. Just don't let it come back down and not take profits and just turn it into a loser. But
Yeah.
I mean, technically, you're in the green and you've almost doubled your money. You can take half off, move your stop, break even, and then if it breaks out, great. And if it doesn't, who cares, right? Because this keeps swinging high and here and here. This is technically a major, right? We're in a giant balance here. right? And now we're going up towards the range highs, which is a key reference area. Now, granted, we balanced here, moving average, and now strength. So I'm not saying the way we got there isn't really looking nice. I'm just saying you're at a zone where sellers could be active, and you might want to consider taking profits. But if it's like a smaller position and you really believe in this coin, keep an eye on it for the next couple of days and see if we get a bounce breakout, and then maybe start taking profits up here when we get to this high volume node. Because at this point in time, there will be um, there's going to be some active sellers. The other thing too that's really awesome that since I just zoomed out, we have more data, is that this trend here is starting from this high volume node, right? And that also increases the odds for strength and trend with mature balance and volatility contraction, because when you oscillate around a high volume node, they often start the trend. So options there. I mean, it's tough to say. Like obviously, if you were at it's anywhere near its all-time highs, without question, you have to take profits. I mean, are you in a situation where you're kind of like the position size is small enough where you're not really tempted to take profits at this point?
Right. I mean, the trades I had at 250 and 260 was just, I was just messing around, a couple thousand each.
Okay. Well, guess what? Your position size is small enough where now you have it's not like you got 55 grand like me in LTO where you're about to lose it. Then I would just keep holding it. Who cares? This could break out. I was just saying if you had like, 15 grand on the line and you're up like more than half, dude, I'd take that shit to the bank. You know what I mean? So but yeah, that's a nice looking chart. I've never heard of this coin. There's so much. That's what I'm kind of afraid of. There's just so many projects, and like, where's retail's just trying to pay their bills. You know what I mean?
Right.
So, but history can repeat itself to a degree if we could just been like one of the weirdest, like with Trump and being the president, all these weird things going down, and Epstein and Israel wars. It's just like it's so weird. It doesn't feel like 2021. That's for sure.
Hope it's a lot different.
It's a
Be nice.
lot different. It's a lot different. Well, that's why we are doing different things this time, because we are not going to repeat the same mistakes. I mean, I've been an investor, member of the channel, that lost a huge amount of money in the last bull run because he fell in love with a project and a coin, bought T-shirts, shared all over social media, joked around, wanted to get his license plate with the coin's name, and then lost everything. It's like, well, don't fall in love with the project. So what did he do this time? Invested in a great coin, SWE, blah, 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 and then buys the T-shirt and does the same energy again. I'm like, God, this is not good. The euphoria, the feeling good is just as dangerous as the fear on the bottom. So it's all about, just checking in. Are we following a correct process? And the most important is just to know, like, it is a lifelong journey to follow correct process with good form. But just know, like, you're going to probably break the rules when you become a pro at it. And as we get better and better, what ends up happening is that we just observe ourselves, catch ourselves in the moment more, so it stops more frequently. And when we do make mistakes, we forgive ourselves much quickly, and we can recover and start again unfazed. You become more resilient. That's what the human side of this strategy must employ, is the resilience. And so, but you know what? Not a bad week. I gotta say, this has not been a bad week for crypto. Excited to see what's going to be happening when we get into more of a fall October time frame, when that Bitcoin time cycle, which hasn't failed us yet, is predicting a very large inflection turning point, and I'm excited to see what happens with that. But Timothy, thanks for coming out. Thanks, guys. I know there'll be people listening in on the replay. I will see you guys tomorrow. As always, trade well. Hope you had a great week, and I'll see you guys in the room tomorrow. Take care.
Right on. Thank you.
Take care, Tim.